Hey guys, welcome back to another YouTube video. Today we're going to be talking about order blocks. Is another confluence that I use in my trades that I learned from a whole bunch of different places, including ICT and SMC concepts. So basically what an order block is, find is when we have an uptrend, and say we break right here. Here we have the liquidity sweep right here. So here we have the liquidity sweep. Let me write that down. Alright, and then so I'm writing down all the confluence that I've explained to you guys. So here we have break of structure, liquidity sweep, and then we can just mark out a fair value gap right here. Alright, so a fair value gap would be the 3-candle pattern like this or this. So what an order block basically is the move up that swept liquidity. Some people just mark the candle and others mark the whole entire move from the low to the high. So let's draw this out. We can use this. So it'd be this area right here. Remove that middle line. Make it yellow, or doesn't really matter. But basically that's what it would be right there. That's what the order block will be. So let's go on the market and find some examples of this. Let's go to yesterday. It felt load. Alright, so this is yesterday. This is opening right here. Let's see what we got. So this was me explaining the fair value gaps. So if we mark order block right here, we can see that it did end up getting hit right here and price dropped to these lows right here. Let's see. Same thing right here, from the low to the high. Price came up into this order block, went back down. Alright, let's and then you guys can go on the charts and mark these out as well. This will help you so that you remember how, and it'll also help you with seeing what price does after and studying it and watching it. So I would suggest you guys go on the charts and draw these out to see what price does and to see for yourself if you don't believe me. This is just something that I use, something that I learned, and something that's been very helpful in most of my trades. So let's just find a few more. Right here, from this low right here up to this high, bring it out. Right here we have the sweep. Let me show you guys. Alright, so right here we have the sweep, and then we have come back into the order block, and then we have it come down into these fair value gaps right here, in this inverse as well, and then we have it go back up, and then we have it come down, sweep these lows right here, and then if we mark out an order block right here, we have it come back, go out of the order block, and then come back into it, and then price rallies all the way up, and then we have the same thing. So there we go. Let's mark out a few more. So let's see. Probably nothing over here. So let's go into yesterday, 2 days ago. Basically, what an order block is kind of like a fair value gap where price goes back into that area to gather up more orders just to shoot back down. It's just a confirmation of continuation. So basically what you would do in a trade is you would wait for a sweep, you would wait for price to go out of that order block, and then you would wait for it to come back in, gather orders, and then you would wait for a break out of it, or you would just enter on the low time frame like the 1 or the 5 minute. So as soon as it goes in and you see a rejection, so like this right here, you saw it didn't displace, it kind of just rejected it, left a wick. Same with this, it left a wick, and then the second candle was a lesser wick. Same with this, you have the black candle come all the way down, and then you have this candle just completely displaced through all of this. And I didn't end up teaching you guys or showing you guys this in the other video, but basically what this little gap right here is also kind of like a fair value gap where there's resting orders to be filled. So as you can see, it just disrespected that, and then it's respecting this huge fair value gap as well. So here you would have it come into the order block and respect the fair value gap. As soon as you would see a break of structure or just up here, you would enter a down trade all the way down here, targeting these lows right here. Targeting those lows or these lows right here, even lower probably. So yeah, that's that. So you would have just this would have been more of a continuation because yeah, as you can see, this white candle right here works as a inverse fair value gap. As you can see, price came into that, so that would have worked as a continuation. So you would have said, okay, if this gets respected, it's a continuation. And then just for a more better setup, you could have waited for that continuation to get completely verified by it coming into this order block and respecting this fair value gap, and then price goes all the way down. Could have just entered off this black candle right here. Let's see how this trade would have played out. Yeah, you could have put your stops on this high or over here on that white candle's high, so right there, and then you could have targeted down here. That's 1 to 3 risk to reward. It's not bad. And as you can see, price actually went down there like right away. So price wanted to hit these two lows as quick as possible. So that's how you see. And then we had another continuation right here, but it didn't continue. It kind of just fiddled out. Price just kind of fiddled out for a while because this was around like 8. So New York time, that's like 11. So that's like during lunch over here. So yeah, that would have been the trade. And then same thing right here. Could have targeted these lows or these lows. If you put your stops up here, you would have ended up going all the way down to here. If you did put your stops right here above this, or I would have put it right here on this. Actually, yeah, I would have put it right here. Let's see. Let's wait for this chart to load. Wi-Fi's been pretty laggy because my friend is uploading some stuff, but let's see. Okay, so yeah, I would have put my stops. If I would have entered on this down trade right here, I would have put my stops right here, either right here or at the beginning of this inverse fair value gap right here. So either one of those two, and let's see. And I would have entered right here as soon as it went down on this candle. My stops right there. As you can see, we would not have been stopped out if we targeted down here, but we could just target this low right here, because let me just remove this right here. As you can see, we have equal lows right here. These lows right here haven't been swept by this, so we know that price is going to come down and sweep these equal lows right here, and eventually price will come down here to sweep these lows. We just needed that retracement for price to come up here and take this resting orders right here. Let me show you guys. So this is what's left of that inverse fair value gap. These orders already got filled, but this is what's left, and price did come up here, and then just to go back down again. So if you put your stops up here, then you would have been perfectly fine. You would have got your TP got hit, and yeah, that would have worked out for you. So yeah, that's how order blocks work, and that's a little more about the trading plan. So that's my setup, and that's what I use. And then next week or this week, after showing you guys all these confluences, I'm gonna start taking trades with you guys, paper trading, of course, and then we're gonna do like a week or two of that, and then we're gonna hop over to real life trading. So yeah, that's what order blocks is, and you guys can also go into the. It's not exactly the same because on this it doesn't measure the wicks, so you wouldn't be able to use it exactly the same, but you'd be able to see like it wouldn't be exactly the same, but you would be able to mark out the low and the high, like right here, the low and then the high as soon as it's swept. Let me go a little closer. So right here, how we have the sweep of these highs right here, and then we mark this low right there, and then mark the high. So this is the up move that went to sweep the liquidity, and then swept it, came down, went back into the order block, and then went down. And then right here we have, right here as you can see, price didn't sweep it because it doesn't show candles on here, so it might be a little different. But you can definitely catch some of them like this. So I would suggest coming on here and marking it out too as well. It'll help you guys understand a little better. So yeah, that's the video for today. Teaching you guys about order blocks and how I learned order blocks. And another thing is that some people mark order blocks just off of that candle, just off of the last candle. So on here, they would mark it out like this, and on this one, they would mark it out exactly like that, like how I did. So this would have been a good one right here. But as you can see, this was before market open, and this was during it. So this is where we had the consolidation, and then this is where we had the manipulation, and then the distribution. Those three. So yeah, and then I'll explain that to you guys later on in the video in this week, and then I'll also teach you guys breaker blocks tomorrow probably. So yeah, that's the video for today. Thank you guys for watching.